Good morning or good afternoon to all of you that are here. We're just going to wait a couple minutes here to have others join us from different parts of the country. And in the meantime, if you want to drop your name, where you're calling in from, we'd love to learn a little bit more about who's here. Welcome everyone again. Good afternoon or good morning, wherever you're calling in from. My name is Amanda Fortier. I'm the Communications Manager with Jumpstart Refugee Talent. And I'm joined today by my colleague, Wasim Jawad, the Senior Program Manager of Jumpstart's Entrepreneurship Support Team, as well as Denise Robertson from the Canadian Aboriginal and Minority Supplier Council, CAMSC, with whom we have the great pleasure of co-hosting this three-part webinar series dedicated to supporting refugee entrepreneurs on their small business journeys in Canada. So today's event marks our second session in the series this year, and we're grateful to RBC Supplier Diversity and their business banking teams for helping us put together today's session. So before we begin, please note that this session is being recorded, so if you'd prefer to keep your cameras off, please feel free to do so. I'd like to start with a land acknowledgement. As we gather on this virtual platform, we take a moment to recognize the importance of the lands that we call home. From coast to coast, we acknowledge the ancestral and unceded territories of the First Nations, Inuit, and Métis peoples. Today, on the National Day for Truth and Reconciliation, we are especially mindful of the history and ongoing impacts of residential schools and of the resilience of Indigenous communities across this country. Let us pause in reflection, not only to acknowledge the harms and mistakes of the past, but also to commit ourselves to listening, learning, and taking action towards reconciliation. Each of us has a role to play in building respectful relationships with Indigenous peoples and in shaping a future rooted in justice, understanding, and mutual respect. Thank you. Just a couple of housekeeping notes before we get started. If you do have any questions during this session, please enter them into the chat or hold them. We'll have a Q&A portion at the end, and we'll do our best to ensure that there's time to address them. Also, a short survey will be shared in the post-event email at the end of today's session, and we'd really appreciate your feedback. It helps us prepare future sessions that are of value to you all. And before I introduce today's speakers, I'd like to pass the floor to Denise with CAMSC, who will share more information about their certification. Denise?
Thank you so much, Amanda. So I will go through briefly what CAMSC does, how to get certified. We do have a more detailed session on getting certified if ever you are interested, and obviously we will do our best to answer your questions during this session as well. So CAMSC, also known as the Canadian Aboriginal and Minority Supplier Council, our goal is to empower Canadian businesses through supplier diversity. So CAMSC certifies Indigenous and visible minority-owned businesses. So this is businesses 51% or more owned, managed, and controlled, either by Indigenous persons, visible minorities, or a combination of both. The goal is to create an inclusive supply chain by connecting diverse businesses to procurement opportunities. Supplier diversity is not a social program or a compromise on cost, quality, or service, but a program that is geared towards creating inclusivity. So supplier diversity is not only a social program or something meant to promote inclusivity, there's also a business case for that inclusion. So over $1 billion was spent annual by CAMSC certified suppliers by our corporate members and government or associated government bodies. We currently have 183 corporate members and 776 certified suppliers. Canada's growing diverse population is another driver for this inclusive procurement. So if you're wondering why you should get certified, there are several benefits, a lot of which are enthralled into our events. So you do have access to some networking events like the Procurement Fair, our Business Achievements Awards Gala, which was held this past Friday, visibility to the 183 corporate members that we've mentioned, We also have capacity building webinars such as these, trade missions. So if you are thinking about expanding globally or have expanded globally and want to tap into other markets, trade missions are a good way for you to do that. And we're always happy to facilitate those connections through our collaboration with the Trade Commissioner's Office. We also collaborate with several partners, such as Futurepreneur, the Canadian Black Chamber of Commerce, just to name a few. So to be eligible to get certified, your business must operate in Canada and be a for-profit enterprise. It must supply products or services to other businesses, so be B2B. It can be a combination of both B2B to B2C, but there should be a B2B element. As mentioned before, at least 51% owned, managed, and controlled by visible minorities and/or Indigenous persons. The owner or owners must be Canadian citizens or permanent residents. The National Minority Supply Development Council, or the NMSDC, is CAMSC's US counterpart. So NMSDC certified suppliers who are US citizens or US permanent residents can also apply reciprocally. So to support inclusivity within the process of getting certified, we do have programs that allow suppliers to get certified at no cost. One of which is the TENT program, which is collaborative with TD. This allows refugee-owned businesses to obtain certification at no cost. So this is if you are or were a refugee within the past 10 years, you are eligible to apply under the TENT program. Then we have the supplier certification sponsorship. This is a corporate member and supplier funded program that once again covers the first year of certification at no cost. In order to get certified, you do need to apply on our portal. On the portal, you'll be prompted to pay an admin fee. If you are or were a refugee, as I mentioned, you don't have to pay this fee. So all you need to do is reach out to us and let us know to bypass that fee. You would also need to upload required documents. After this, we'll share a detailed slide deck with what those documents are, just in the interest of time. And we do process all applications within 25 business days or 12 business days if you've paid the $300 rush fee. So if you are an incorporated business, you need to provide articles of incorporation, share certificate, a shareholders register, your ownership structure, as well as a master business license. If it's a sole proprietorship, just a master business license you get either from the federal government or the provincial one, depending on how you've registered. And then for partnerships, we just need a partnership agreement and your partnership registration document. We also require a profit and loss statement and balance sheet for the past 2 years for all people seeking certifications, regardless of legal structure. So I will wrap it up here. Of course, you're welcome to contact us with questions, but at this time, I will throw the floor back to Amanda to introduce our speakers.
Thank you, Denai. So for today's session, we are very excited to welcome 2 expert speakers through our partnership with RBC. We have Denise Robertson. She's partner at Mills LLP and chair of the firm's business law group. Denise brings nearly 2 decades of experience advising private businesses and will be guiding us through the key steps and considerations in registering your business in Canada. Next, we'll have Shawn M. Bush, CPA, principal at SB Advisors, Inc. With expertise in both Canadian and US taxation, Shawn works closely with business owners to help them navigate tax and compliance matters. Today, he'll share with us practical insights to help refugee entrepreneurs understand the essentials of business taxation and financial planning. I'll pass it over to you now, Denise.
Okay, thank you so much, Amanda. Thank you for the kind introduction, and I'm very pleased and delighted to be here speaking with everybody about business registration in Canada. So you've already learned a little bit about me and my background, so I'll move over to the legal disclaimer that are quite typical in these types of presentations. So just generally, I want to make sure everybody understands that this is not any specific advice related to your situation. What I'm trying to do here is provide information and suggestions for good practice. So I encourage everyone to do a lot of their own learning and then to reach out for any particular advice that they may need. The agenda for the presentation is to cover the importance of business registration, different forms of business organization available, advantages and disadvantages of those types, a guide to registration, some regulatory compliance, common pitfalls and how to avoid them, and then just to offer up some resources and support that may be available. So there's a number of different reasons why registration is important. Registration offers legitimacy and protection to the business. It establishes, whoops, I lost my screen. Hold on a moment here. Can you still see the presentation? Okay. For some reason, I have lost it. There we go. I got it back. Okay, thank you for that. Sorry about that. It establishes legitimacy, giving your business rights and protections under Canadian law. It protects your brand and your business name, and it can protect your personal assets if you're incorporated. Business registration helps with tax compliance and potential tax benefits. With business registration, you may be able to gain access to funding and banking, as banks require proof of business registration in order to open up a bank account. And lenders may be more willing to lend to somebody with a registered business. It also increases credibility on the market as it signals professional image and reliability to customers and suppliers. Then finally, with respect to operational growth, if you're going to be hiring employees or if you're going to be seeking out any types of credits or certain government programs, business registration is important for that as well. There are two basic forms of business organization available in Canada. The first one is unincorporated business, and the second is incorporated business. An unincorporated business, there may be two different forms. The first one is a sole proprietorship. That's a business owned by one person. The owner has complete control over the business and receives all the profits, but is also personally liable for all of the debts and liabilities of that business. And this liability extends even to personal property and assets. The other form of unincorporated business is a partnership. And this is where two or more go together. And a partnership agreement is required. It needs to set out the management responsibilities, interests in the business, and allocation of profits for each of the partners. And with a partnership, each partner is jointly and severally liable for the debts of the partnership. The other form is an incorporated business, and a corporation is a separate and distinct legal entity. Ownership of the corporation is through ownership of shares, and the shareholders are not personally responsible for the corporation's debts. A corporation can separately own property, enter into its own contracts, sue or be sued independently of the shareholders. So now let's look at some advantages of the different types. So with an unincorporated business, it is simple and inexpensive to set up. There are minimal legal formalities, low startup costs, and you have full control. So again, you make all the decisions and keep all the profits. Dealing with taxes can be simpler and less costly. There's less paperwork as there's fewer compliance requirements compared to corporations. And the banking can be easier because you simply just need to have a personal bank account and all of the money can flow through that. Some of the advantages for a corporation on the flip side include limited personal liability for the owner. Your personal assets are protected from business debts. There's a possibility for lower tax rates and potential for income tax deferral, which Shawn may speak a little bit about later. And then also an important aspect of this is the perpetual existence, and it can also make selling the business or changing ownership of the business easier. You can either sell the shares that you own in the company or sell the assets of the company. And then next, you can support the credibility and growth of the business, as it just boosts the long-term support that you may be able to get for expansion. And then lastly is business name protection for the corporate name. There's no need to renew the corporate name. It continues for the life of the business. Some disadvantages. So on the unincorporated business, again, you have unlimited personal liability as you're responsible for all business debts and legal claims. And there's no continuity to this type of business. The business ceases to exist if the owner dies or becomes incapacitated. It can be hard to grow and expand. Plus, selling the business may be a little bit more difficult than if it was an incorporated entity. And you may have limited access to funding and potential government credits with an unincorporated business. And probably similar to some of the advantages of the unincorporated business, the disadvantages of a corporation include higher startup costs and ongoing maintenance costs. So you have to pay the incorporation fees, and there could be ongoing accounting fees and legal fees to pay with the corporation. There's going to be more paperwork and ongoing compliance as well. There's more complex taxation regime that would apply, and you need to keep up to date with changes to applicable legislation and regulation. So just because you might have it set up doesn't mean you just ignore it. You have to continue with that, and I'll speak to that issue in a little bit here. So for the actual registration, there's several different steps. So first of all, of course, you need to choose your business structure. What is going to suit your business best? And if you choose a sole proprietorship registration, there's a couple of simple steps. You need to register a business name and perhaps register certain accounts with the CRA. And in Ontario, for a partnership registration, again, you have to register the firm name and file a declaration, but would also need to prepare and sign a partnership agreement. And if you choose incorporation in Ontario, you would have to do a name search to make sure that the selected name is available, file articles of incorporation and pay the government filing fees, and then take a second step of actually organizing the corporation. This means preparing bylaws, consents to act for the directors, organizing resolutions, share subscriptions, and so on. There's an initial return that needs to be filed, open up the bank account, and then appoint an accountant. Similar steps apply for the federal incorporation, but the one difference there is that you need to take an additional step to file extra provincial registrations in all applicable provinces where you do business. So for newcomers to Canada or businesses looking to expand into Canada, the decision as to where to incorporate can sometimes come down to director residency requirements. So I have some excerpts from legislation here that will help us look at these considerations. Federally, under the Canada Business Corporations Act, at least 25% of the directors of a corporation must be resident Canadians. And the definition of a resident Canadian is either a Canadian citizen who's ordinarily resident in Canada, or someone not ordinarily resident but meets some prescribed list of persons, or it also includes a permanent resident. But under Ontario Business Corporation Act, as of July 2021, there were no more residency requirements for directors. So the same type of rule no longer applies in Ontario. And there's other provinces that made those same types of changes. And I understand that it's Manitoba, Saskatchewan, and Newfoundland, Labrador that are the remaining provinces that have the residency requirements. There's several ongoing regulatory compliance. So depending on your type of business, there may be licensing requirements at one or more levels of government. So you can consult various resources to confirm that. If you've got a corporation, you of course need to file the tax returns and prepare financial statements, need to hold annual meetings of directors and shareholders, file some annual returns. And the one key thing you need to do for an unincorporated business is file the business name renewal each year. So some common pitfalls that we see and how to avoid them is misunderstanding or choosing the wrong business structure from the outset. Many entrepreneurs may opt for the sole proprietorship because it's quick and easy, but it offers no liability protection. And choosing the wrong structure can affect your taxes, your liability, and the long-term growth. It's also very important to reevaluate your structure and your needs over time. You might start out as a sole proprietor, but then grow the business, and at some point it might make sense for you to incorporate. Another pitfall may be not separating your personal and business financing. So again, it's very important to keep records of all transactions and make sure you know what is personal and what is business. And then also, if you do have a corporation, avoid giving personal guarantees, because a personal guarantee means that your personal assets are at risk if the corporation defaults on a loan, for example, or on a lease with a landlord, for example. Another pitfall is missing deadlines or filings. So very important just to input those important dates into your calendar. Make sure that your current contact information is up to date with all regulators like the CRA or the Ontario Business Registry or Corporations Canada. And then lastly, just a failure to maintain record and registrations. So again, maintaining those proper corporate records and accounting records is pivotal. You may think that you're set up properly, and then if you put it on a shelf and ignore it for years and years to come, it might be a problem in the future, because failing to do certain filings could lead to non-compliance. Now, just before I end here, I'll just give you one heads up. Corporations Canada has been dissolving companies for failing to file their annual return. And an annual return is just a one-page, very simple document to be filed each year with Corporations Canada, stating who the directors and officers are and if there's been any changes to addresses. So again, that's something you would not want to miss. So then lastly here, just some resources and supports available. Maybe what I'll try to do is copy some of those into the chat, or we can share the presentation a little bit later on, but there's certainly the online tools available. There are the several community supports available, and when necessary, I encourage you to seek out any accounting, legal, and other professional advice that suits your needs at the time. And just want to thank you for the time right now. I will be happy to address any questions at the end of the presentations.
Wonderful. Thank you, Denise. As Denise mentioned, we'll take questions just at the end. We'll let Shawn go ahead and present, and then we're monitoring your questions now in the chat, and then we'll also allow you to raise your hand. So thank you, Denise. Please go ahead, Shawn. Thank you.
Thank you, Amanda. Okay, so it's a pleasure to be with you all here today, and with my co-presenters. Thank you to Jumpstart and to CAMSC for arranging this. Following on Denise's presentation, I'm going to speak with you a little bit about the tax and accounting basics for new businesses. Certainly take questions at the end, as Amanda mentioned. A notice in advance, as you heard earlier from Denise, the examples and what we'll discuss here are general in nature, and they're not specific for your situation. It's very important that you get excuse me, specific advice to your situation, because taxes is highly dependent on individual circumstances. Okay. We're going to look at briefly, number one, choosing the form of the business, which Denise has gone into detail on, so we won't spend much time on that. We're going to touch on the banking requirements for new businesses, bookkeeping considerations, opening CRA tax accounts, and the annual compliance for businesses. Okay. All of these items relate to planning, and planning is key. And why is it key? Because it gives you more time, time that you could otherwise be enjoying your personal time when things are organized. Gives you more space to deal with significant changes in a non-rushed and non-pressured manner. Okay. So, number one, forming an entity or doing business as a sole proprietor. As Denise mentioned, there are different types of entities which you can form, and those entities provide some legal protection from the creditors of the business against your personal assets. So it shields your personal assets from the creditors of the business. There can also be potential income tax deferrals as a result of forming an entity. If, for example, the cash flow of the business is greater than the business's cash flow needs. forming an entity, as Denise mentioned, does come with more administration. So you're accepting some more legal and accounting administration when you form an entity, and that's the trade-off to those benefits just mentioned. A sole proprietorship, your personal assets are exposed to creditors in a sole proprietorship, but it is easier to administer. Okay. To get going, it's important that you connect with someone to help you. Denise can help you with this. You'll want to choose a name. That's true whether or not you're forming an entity or whether or not you're doing business as a sole proprietor. If you want to use a trade name, if you wanted to have something like Lululemon or something that's just very specific to your business, that name needs to be registered because it needs to be unique. You're also going to want to choose a year end, and that is going to be the fiscal year end of the business, marking the last day of the fiscal year for which you'll need to prepare accounting and financial records. And when you're thinking about choosing a year end, think about when you want to be doing the work of filing for the year end. Okay, a word about banking. It's crucial that you maintain separate bank accounts for your business aside from your personal finances. The tax authorities, the Canada Revenue Agency, and other authorities can penalize you for not keeping accurate and separate accounts of your business apart from your personal finances. So in the same way that you'd want to have separate bank accounts, you also want to make sure that you have separate credit products for your business. Make sure that you have credit cards in the name of the business if you need credit cards. And if you have loans, make sure that you have those loans separate from your personal loans. Okay. A brief word about bookkeeping, setting up bookkeeping. The first item that you're going to need from an accounting perspective is the general ledger. So in order to set up your general ledger and start tracking your activity, the business's activity, decide on a bookkeeping system. Excuse me. Excel is usually not the best choice. Yes, there are lots of great products out there. Intuit has great products, a Canadian system. And from there, that's where you should plan to do most of your bookkeeping. Once you've selected a system, create your chart of accounts. So ensure that you've got a chart which reflects the requirements of the business. If the business is going to have physical assets, make sure you have accounts that can track those physical assets separately from other items in the business. If the business is going to have loans, make sure it has the chart of accounts, includes accounts that are going to be able to track the loans, etc. Then, of course, you're going to want to begin to use this system as soon as possible. The sooner that you get into this system, the easier it becomes to maintain the system. One of the worst things that new business owners face is trying to catch up after they've been in business for some time. When you're choosing your system and creating the links, it's a good thing to ensure that it can be shared easily, both with your internal financial staff and your external accountants. So every business needs to register with the Canada Revenue Agency. The first element of registration is the business number itself. And if you've formed an entity, then part of the formation process will include registration with the Canada Revenue Agency, and you'll receive a business number in the mail. But depending upon the nature of the business, it may require additional accounts. We call them program accounts. If the business is selling goods which are going to be taxable under the sales tax regime, you're going to need an HST account. That's a different account than the basic income tax account. If the business is going to be paying employees, then you're going to need a payroll account. Paying employees or contractors, excuse me, then you're going to need a payroll account. The choice in both of these cases, you're going to want to understand the best filing frequency when registering for these accounts, because it's set when you register. It can be changed later. Other accounts that you might need to register for could include import-export accounts or information return accounts, for example, if the business needs to issue T5 slips or T5013s. Now on to annual compliance, a few words. So every business is expected to file an annual income tax return with the Canada Revenue Agency. If you're doing business as a corporation, the filing deadline is 6 months after the year end of the business, but the tax payment deadline is 2 or 3 months after the year end, depending upon the nature of the business. So that takes us back to our point in the first section. When you're choosing the year end, think about when you would prefer to do this work. Would you like to be doing it in February, March every year? Or would you like to be doing it in July or August or some other time? A sole proprietorship has a tax payment deadline of 4 months after the year end and a filing date of 5.5 months after the year end. For the HST account, if your business is required to file HST returns, there are many options or possibilities depending upon the nature of the business. If the business is a monthly or quarterly filer, then taxes are due 1 month. Taxes and filing are due 1 month after the period end. If the business is an annual filer, it's 3 months. Payroll account. Again, depending upon the nature of the business, the frequency at which you're paying your employees and the size of your payroll, there are many different possibilities as to your remittance schedule. There are some options for you on the screen, depending upon whether or not the business is a bi-weekly or bi-monthly remitter, or a monthly remitter or quarterly remitter. Other accounts, if the business is filing T-slips, for example, T5s, then the due dates are either February 28th, 29th, or March 31st, depending upon the type of slip. Okay. So some key takeaways for new businesses. Number 1, plan ahead. Make sure you plan ahead. You can't do this too much, and it's a good idea to put it down on paper so that you can remind and think about it, reflect on it later. Refine it as you go. Number 2, review your options with knowledgeable people. Feel free to reach out to Denise or myself on the topics that we've discussed here today, or others perhaps that might come to mind. Number 3, stay on top of your basic compliance requirements. Getting behind and trying to catch up after months or worse, years of non-compliance can be very difficult. And at that point, usually payment or satisfying the requirements of the CRA are very urgent. So again, very difficult to do and more costly. That's it for me. Thank you very much.
Thank you, Shawn. You can see that there's quite, some complexities here that I think will be individual for each person. And we've noted a lot of the questions coming in through the chat. Again, we're going to hold them a little bit to the end and pass the floor over to my colleague Wasim Jawad, who is the Senior Program Manager of the Entrepreneurship Support Program at Jumpstart Refugee Talent. And then we'll get to your questions. So Wasim, pass it over to you, please.
Thank you so much, Amanda, and thank you for the great information, Shawn and Denise. Thank you everybody for joining us today. I'll keep it short so we can give you time to ask your questions. At Jumpstart, and I can see that there are a lot of questions regarding the marketing, regarding approaching clients, regarding the plan and strategic plan for different kind of businesses. So our team at Jumpstart try to support entrepreneurs in building their plans, strategies, finding resources, or taking their decisions in how to invest their time, resources the best way. So please feel free to book a call with our team. I will share the link here to do so. And if you need, the only application is to be a Jumpstart client. If not, please use also another link I will share to register as a Jumpstart client. And we will be happy to find the best way to support you and help you during your journey. I would let's say go now right to questions. Amanda, what do you think? Are we good there?
Yeah, that sounds great. Thanks.
Perfect. So I'll start with the few questions regarding for you, Dennis. And one of the questions that about from Lima. Do we need to use the name search report in the case of sole proprietorship businesses?
It is good practice because it gives you the opportunity to have a look at what other names are registered and might be similar to yours. And what I often do and my clerks will do is also just a regular old Google search to see what else might be out there, because we want to avoid a situation where you put time, money, and effort into registering your business under a particular name, and then 6 months later learn it's deceptively similar or even identical to some other business out there. And so while the filing in certain jurisdictions may not require that you attach that search report with the actual filing itself, it is very good practice just to satisfy yourself that that name is available.
Perfect. Thank you so much. A question for you, Shawn. Also, let's say an example of from Joe that she started a sole business on November. So when is the first declaration? Is it on April every year or the next year?
The first income tax return is is going to be due as a sole proprietor. It's going to be due by June 15th, following the fiscal year end. So unless her business is a specialty business, a fishing business, or a farming business, the fiscal year end is going to be December 31st. And so that's why it would be June 15th would be the income tax return would be due.
Thank you so much. A question from Sahar, I think for you, Denise. So she's planning to start to sell online, and she's asking about the common practice. Should she start it as a sole businesses then incorporated, and what's the stages as in general, let's say, when the people decide to incorporate in Canada?
Well, there are various factors, and it doesn't even really depend necessarily on the line of business. Those lines of business that are a little bit more risky, like home improvement, perhaps, they may want to incorporate from the outset, but then there's other businesses which may want to take into other factors, such as cost, such as, are we going to be able to take advantage of any tax benefits in the outset? Or maybe we just want to try it out for a little while as a sole proprietorship and then move into corporation. Maybe Shawn would speak to a financial threshold, but I think it's just dependent on the person, because they might have resources coming from elsewhere. And so they wouldn't be able to take a benefit of tax until they're earning a lot more. But then there's others, maybe they don't. And so they can take advantage a little bit earlier on. So I wouldn't really say there's a hard and fast rule on a financial threshold for when it is time to incorporate. Just on the point, though, of running an online business. So I'm very pleased to hear you're putting some thought to business structure. But in addition to business structure, also need to give thought to terms and conditions that might be needed for the website or an online service agreement, those types of things. And so I know that's not the topic today, but there's certainly other implications, legal and otherwise, to take into account.
Perfect. Thank you so much. A question from Ibrahim. Do I have to create a payroll account, or can I e-transfer to my contractor and employees from the company bank account?
So the payroll account at CRA is not related to the actual disbursement of funds. It's related to reporting the disbursement of funds and related to giving to remitting a portion of those funds or the required portion to the CRA. Anyone who's been on a payroll here in Canada is familiar that their paycheck is actually a net paycheck. Your employer deducts the required amount of tax and sends that directly to the CRA every couple of weeks or a month, however frequently you're being paid. So if you're paid, for example, $4,000 on a paycheck, you might only get $3,000 of those dollars, and $1,000 was sent directly to the CRA on your behalf, so that when you file your tax return at the end of the year, you can see that you've already had deductions and you paid you've already paid a lot of income tax for the year, and so usually you get a refund. That's why. And so the payroll account is used to report those and track the remittances, the portion that you as an employer need to give to the CRA on a regular basis.
Perfect. A question from Joe and Denise, I think. What are the essential first steps to protect my brand, logo, and intellectual properties before launching on Kickstarter and selling in Canada and the US?
Well, there's a variety of different things you can do. Again, this is a little bit more of a specific question, so I'm just here to provide some general best practices and guidance. Certainly, you could register a trademark or protect that business name by either incorporating or sole proprietorship with the business name. If you are licensing the use of your logo or your brand elsewhere, a licensing agreement is pivotal. And I think just, doing a little bit more research and maybe having a conversation with a lawyer can help you look at some of the other steps.
Perfect. Thank you so much. In incorporating a business federally, do I start with provincial incorporation first, like example, Alberta, and then incorporate it in Ontario, for example, or as a province or each provinces? Or can I do all at once?
Yeah, that's a very good question. So the regime in Canada, each of the provinces has a Business Corporations Act. They may call it a little bit different each province, but for example, in Ontario, there's the Ontario Business Corporations Act. But in addition to the provincial pieces of legislation under which you can incorporate, there's also a federal piece of legislation called the Canada Business Corporations Act. And you only need to incorporate under one of those acts. So you pick which is going to make the most sense for you. And there's different considerations that might go into play there. If you're just going to maybe be working in Alberta, running your business out in Alberta, you probably don't need federal or to be in other provinces, but it doesn't prevent you from expanding in the future. There's certain government regulated industries, or federally regulated industries, which make sense to incorporate federally. And then I also commented on the director residency requirements. So just to be mindful of those rules. And then once you pick your jurisdiction within which you want to incorporate, then you can expand into the other provinces, or again, federally. Then what you would do is you have to register what's called extra provincial licenses or registrations in the various provinces. So there's different fees involved there. Sometimes there's annual renewals to stay on top of. And you only need to file those when you are actually doing business in those other provinces. So an Ontario company and wanting to expand into BC may need to look into, well, what does it mean to do business in BC? And like many things, there's different definitions in each of the provinces. So it's very important to do the due diligence.
Perfect. Thank you so much. Another maybe general questions and guidelines. What basic legal agreements should I have in place at the very beginning with suppliers, customers, partners, or employees to minimize the risk and demonstrate professionalism to potential investors?
Well, again, it's going to depend on the business. So when I'll have a meeting with somebody who's just starting out, we sometimes create a priority list. And sometimes you don't need to get to all of those documents straight away because the consulting agreement is pivotal, because that's the one that you're going to start earning money with. And you haven't hired any employees yet, so you don't need an employment agreement. But then once your business grows and expands and you need these other documents, then yes, bringing on that first employee or retaining the services of an independent contractor is important to document that. If you're going it alone, and certainly when you incorporate, you can do it on your own. You can be the sole director, officer, and shareholder. You don't need any type of a shareholder agreement, but if you do go into business with others, very important to have a shareholders agreement from the outset, because everything might be happy and going along very well and swimmingly from the outset, but we see sometimes it doesn't go so well as the business is being run. So if you have a shareholders agreement, it can help to outline what happens in certain situations.
Perfect. Two questions, related questions, and I think we covered that during the presentation. But to be incorporated, can I do it, let's say, as an alone without partner? And if I started as also a sole company, can I change it to and incorporated with different partners as well in future?
The answers are yes and yes. So certainly, as I mentioned just a second ago, you can do it on your own. So you can incorporate, you can be the sole director, officer, and shareholder. And then in the future, you can bring in others. I think I saw a question there about maybe bringing in a spouse or a sister or somebody else as a shareholder. And it's just a matter of issuing additional shares to that person or transferring some of the shares that you already own to that person. But there are tax and legal implications involved in that. And so we want to make sure that you do have the conversation with your accountant and perhaps your lawyer before moving ahead with that. As for the question about moving from a sole proprietorship to a corporation, yes. And that is a common route a lot of people take. They'll start out sole proprietor and then they grow the business. They build up some goodwill. They get their customers and then I got to hire some employees and I'm expanding this way. And they just need to keep their mind on the goal of when should be the right time to incorporate. And so then you take that step, you create the business. Again, there are some tax components to it because you might have to roll over some of the assets that you own in your business, in your yourself as a sole proprietor into that new business. I don't know if you want a more complex answer from Shawn, but I know there's some steps that can be taken there.
There are steps, yes. And yeah, as Denise mentioned, it's very common to start as a sole proprietor and then transition to a corporation later on.
Perfect. Thank you both. Before maybe open the floor also, if there's anybody would like to ask their question personally, we can also provide our clients here an opportunity to ask their question. There is a good maybe question from a client who said that both of you please, what can you share that the common mistakes that newcomers in general and refugee maybe also that they face or do when they start their own business and register their own business?
Denise, would you like to go first?
I guess I've got one, and it doesn't just belong with newcomers. It could be anybody starting a business. It's the set it and forget it. And that's what I see on the corporate law sometimes. So if somebody's incorporated the company, maybe they've gone to a lawyer, maybe they've sorted out how to do it themselves. And from day one, it's set up properly. But then they'll put it up on the shelf. We used to have physical books we put on the shelf, but you could have a virtual minute book and you just leave it in the computer and you don't touch it for years and years on end. And that's the biggest mistake I see, because in the future, when you are either wanting to bring on a new shareholder or hopefully not, but maybe the CRA wants to do an audit of your business, or maybe you want to sell your business. You've had a successful 10 years and you're ready to sell it off. You go and open up your records and it doesn't have anything in it that's happened during the life of the corporation. Or hopefully not, you go to find yourself on Corporations Canada and you've been dissolved because you failed to file that very simple annual return I've talked about. So neglect, I think, unfortunately, is neglect of the records is one of the biggest pitfalls I see.
I would agree. I see the same, exactly the same, and I agree with Denise that this is not specific to newcomers. And, you know, people who started in Canada exhibit the same bad habits as anybody else, and it's what we would say poor hygiene. Just like it's advisable to go to your doctor, or your dentist once or twice a year. You should attend to your corporate records, your accounting records in a methodical basis at least once a year. For bookkeeping, certainly more often than that. But yeah, that neglect is the biggest issue. Yeah.
Perfect. Thank you both. A question about the let's say how much it will take to register the business if I start on October, the registration period or the time, the average one.
Well, it's an online filing. So if you're doing it yourself or you found some supports, it can be very quick with the filing. It's just very important to understand that you got to take that next step of actually organizing the company. So if you're incorporating, you have to issue the shares, appoint officers, select an accountant, open a bank account, those types of things. Dealing with a law firm, we've had certain situations where people are in a huge rush to incorporate and we get it done in less than a week. Like it can be very fast turnaround. We just need to have the full instructions and all of the details that we need in order to take care of the incorporation quickly. Typically, it's a 2-week process, but again, it depends on the needs of the client.
In regards to having a complicated legal compliance due to multiple entities can be confusing. How can I get support in relations to legal paperwork?
Again, just getting your paperwork in order, making sure you have as much of the records as possible, and then going and talking to either a lawyer, an accountant, or a business advisor. I think I saw another question about multiple entities as well and the ownership of them, perhaps. And so, again, generally speaking, I've seen people have a holding company up top, and then maybe they have multiple operating companies underneath. And so that holding company serves as the shareholder of each of those operating companies.
Okay, thank you so
Yeah,
much.
and that can have pretty deep tax impacts as well. So if you do have a complicated structure, there are both opportunities and obligations that arise from that. And so it'd be good to have a conversation, a tax planning conversation around that. That's supplement that.
Perfect. And this is maybe a little bit a case by case question, but in general, can I register or must I have a physical business address, or can I use my residential address for registration as I wait for business to take off for a corporation?
No need to have a physical address or like a shop opened or anything like that, or an office, but you do need to have a registered office address in the province where your business is. And it could be your home address. It could be a law firm's address, for example. So we've got several clients that are expanding into Canada, but they're just not set up here yet. And so in order to create their subsidiary, they would use our office address as the registered office address.
Thank you.
Similarly, the Canada Revenue Agency is going to require a mailing address anywhere you can receive mail. It doesn't have to be an office. It doesn't even have to be your home. It could be a post box, but the Canada Revenue Agency is going to want or require an address where you can receive mail.
And maybe it's also important to note that that address is publicly available too. And so for certain organizations, and a lot of times it's not-for-profit organizations, they may not want all that detail available, but the list of directors and their addresses, as well as the registered office address, can be easily found by way of an online search.
Thank you. I want to make it like as an advice here, but there's a question about as a business owner, can I learn to prepare and file my CRA returns myself?
Yes, you can. You certainly can. As a business owner, you could and should get access to your business accounts on the CRA. So that means you can check the status at any time of your business accounts, any filings that are due or overdue. Certain returns you can file directly online through CRA's website, and you can learn to do any return if you'd like to.
Thank you. So in the few minutes left here, if anybody preferred to ask his or her question, we are happy. Just raise your hand and we can accept a couple of questions here. Yes, Muhammad. Go ahead, unmute and ask your question. Thank you.
I have a question. As newcomers, last year me and my daughter and my wife family made a sole corporation to work online, to sell and work online. Right now, usually we file our in CRA our tax. Right now, we want to change the name of our corporation to visit under my name, wife. What we should do, and from where we start to change it?
Okay, so I think what I've heard there is either changing the name of the corporation or changing the ownership. So just again, general guidance here. Typically, to change the name of a corporation would be articles of amendment that would have to get filed with the government. But to change the ownership of the business, so if you've set it up one way, and then you want to bring in other shareholders or transfer shares. It's all based on transferring the shares of the company. So think of the shareholders up top and then the companies down below. Each of the shareholders own a part of that company, and it's the shares that they hold that is their personal asset. So just like you might sell a car, the individual is going to want to sell their shares to somebody else. And as I may have mentioned earlier, there are legal and tax implications to that. Like, what are the value of the shares? What is the person getting in return for that? And should the shares, do you want to have different classes of shares to be held by different people? And so there's lots of opportunity to set it up the best way for you and your family.
Perfect. Thank you so much. Joe? No, sorry. Joey, do you still have a question? Okay. Muhammad, okay, another question, maybe follow-up questions. We have time for another final question. Okay, Muhammad.
Just quickly, can we do this online or not? So sorry.
Can we do business registration online?
For example, we have to when we have to change the owner of the name, not my corporation of the name. Can we do this online or not? Or we have to go to in person in an office, a specific office?
Okay, I just have to back up a little bit, because when you first create a company, there's two key steps. The first one is to incorporate it. The second one is to organize it. When you organize the company, part of the steps are to issue shares to shareholders. And you keep all of these records in a corporate record book or a minute book, and it becomes done virtually. And so if you're just transferring shares among different individuals, that it's not something that gets filed online, but you do need to document it by way of written resolution or some sort of a transfer document, a share purchase agreement. And so there are lots of legal steps that need to happen there. And if your company is incorporated in a jurisdiction that requires there to be an individual with significant control register that basically says who owns the company, filed with the government, federal companies do, then you have to make sure you make an update to that. It's called an ISC register, but I know it's getting a little bit more technical there. So I suggest you maybe reach out to your accountant to start the conversation that way. And if you've got a lawyer, to talk to them as well.
Thank you so much, Denise and Shawn. Back to you, Amanda.
Wow, thank you. Thanks, Wasim. Thanks to everyone for your great questions. Quick reminder before we wrap up that we'll share a short post-event survey, which you'll find in the follow-up email, as well as the recording and the links. We're so grateful to our partners at CAMSC and to our fantastic speakers, Denise and Shawn, as well as to RBC Supplier Diversity and their business banking teams, and of course to all of you for joining us today. So we have one more webinar in this series with CAMSC, and we'll be focusing on marketing essentials. So stay tuned for that exact date and time. Thank you all again, and enjoy the rest of your day.